Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. We got some news out of the Federal Reserve today, and it did not go well for the stock market. The S&P 500, that is the 500 largest companies in the United States, was down 0.99%, and the NASDAQ, which is basically just the tech stocks, that was down more than 2% today. So in today's video, we need to discuss a few things. What is the Federal Reserve doing? Why are they doing this? What should you do as an investor? Like, what parts of the market are working right now? I've got two that you definitely want to know. And then again, like, what's going on and why? So first off, everything that we found out today was scheduled and planned. We've known this for quite a while. The Federal Reserve, their main job is to control inflation and keep the economy alive. Okay, that's basically what they do. And in terms of the inflation thing, they've got two things that they can do. They can raise interest rates, which they've already done that. They've already done that. It's went up by 0.25, or what they call 25 basis points. And they may, which is what we found out today, they may increase that. Instead of doing 0.25, 0.25, and 0.25, say, look, we're just going to go up by 50 basis points. We're going to go up by 0.5. And as I've said before, and you have seen this year, when interest rates go up, or even the threat of interest rates going up, tech stocks don't like it, and tech stocks drop. That's why tech stocks as a whole were down about 2%. Makes sense, okay? So interest rates, tech stocks, they don't necessarily mix. That was the first thing that we learned. But the second thing that we learned is that the Federal Reserve is looking to reduce its balance sheet by $95 billion per month. Which brings us to this question. What is a balance sheet? What is on a balance sheet? What does all this mean, right? So here's the thing. A balance sheet basically tells us your assets and your liabilities. How much you got, and what do you have it in, and who do you owe, and how much do you owe. And during the pandemic, the Federal Reserve used this balance sheet and grew the balance sheet by $9 trillion, or to $9 trillion rather. That means they was buying up a whole lot of stuff. Now the stuff that they were buying were U.S. Treasurys, that's basically U.S. bonds, and mortgage-backed securities, which are supposed to be safer investments. We can get into mortgage-backed securities in an entirely different video. However, that's what they were buying. And think of it like this. If you came and bought, I don't know, 50 million of my books, you helping me out, right? I get more money, and I can go take that money and go spend it on stuff and support local businesses and go buy more tacos and all kinds of stuff, right? So that's basically what they were doing. When they bought bonds, that means they were giving cash to somebody and some entity, and they were taking that money and stimulating the economy and keeping things alive. That's pretty much how it works. So the Federal Reserve says, all right, cool, I've raised interest rates. That should help inflation, but I'm also going to let this $95 billion go every single month until I get it to where I want to get it to. Now, what do I mean by let it go? Bonds have maturity dates. For example, they have, a 1-year bond that would expire. I can choose to let it expire. I can get my money back and mind my business, or I can go renew it and go buy more of it, which will continue to stimulate the economy. They're saying, look, I think it's in a healthy enough spot. I don't need to renew it. So I'm going to let this $95 billion roll off the balance sheet and just let it go. And that's what they are essentially saying. $95 billion a month, I'm going to let it go and just, go about my business. You don't need the same stimulation. You don't need the same tactics that you needed 2 years ago. That is basically what the Federal Reserve is saying. That is their focus right now. And because of that, just like if you told me you were buying $50,000 worth of my books, I'm like, oh my God, that's exciting. And then when you say, hey, I'm not going to buy 50,000 anymore, I'm going to buy 40, I'm going to buy 10, I'm going to buy 0, I'm going to be a little less impressed. I'm not going to be as excited, right? And that's basically what the market is finding out. So, oh, you're going to let go of $95 billion every month now? You're not going to keep buying stuff and helping us, continue to be stimulated? You're not buying no more? And that's basically how the stock market performed today. But here's what you need to know as an investor. Number one, we've known all this stuff before. I've done videos on interest rate hikes. I've done videos about the balance sheet and what it means when the Federal Reserve buys and sells stuff. We've done all that before. But here's the thing. And I've mentioned this too. If you've been on here and liking and subscribing like you should have, and asking questions and commenting like you should have, this is your opportunity to do that right now. We've been saying for a while that healthcare is one of the best places you can be, as well as defensive stocks. There's a third category that I'm going to do some more research on, and we may talk about, depending on if I can stop getting breaking news on utilities. But today, Walmart, which is in that defensive category, hit an all-time high today. Walmart, of all stocks, Walmart was up. Costco was up more than 1%. AbbVie, I've been talking about that one. ABBV, it was up more than 2%. Eli Lilly, Johnson & Johnson, I feel the type of way about them, but in either case, they were up today. United Healthcare, those were the two sectors that of all the red, I'm talking about all the red we saw today, those were two areas that have been good all year long, but especially today, they were, the one shining moment, if you will, of the entire stock market. We've been through this for a quarter. If you haven't made that pivot, you might want to do some research into those two areas. Again, if you have not already. Are those all the areas in the stock market? Not necessarily. Y'all know I'm liking insurance companies now too, so keep an eye out there as well. But that's where you want to be. Those are places that you might want to consider. Those are places that I will be pivoting to, and a place that I'm definitely trading currently, but definitely a place I'm set on pivoting to come June, right? I still have to follow my process and follow the rules that I have. So I got to wait another 2 more months, unfortunately for me. But in either case, this is what the market is. We've been talking about it. It's happening. The Federal Reserve is making moves. They're not buying as much. They're going to be raising interest rates. So it's your job to say, okay, I've been hearing this guy talk about this on this here screen for months now. I need to, be aware. I need to know how to react. I'm not telling you that you should sell your tech stocks. I'm not selling that. I'm not saying that. I'm not getting rid of Microsoft. I'm not getting rid of Apple. You're not making me do it. Okay. Like those I think we're all okay with like keeping. But a lot of these smaller names, a lot of the things that may have worked for you in 2020, maybe a Zoom or something like that, I always bring them up, but y'all get the point. Those are the stocks that I would look at cutting and say, look, I will replace some tech with insurance. I will replace some tech with healthcare or defensive Coca-Cola, Walmart, Costco, something like that. Dollar Tree, DLTR, you want to keep an eye on that one too. I would start to make those moves if you haven't already. I've been talking about it for a while, so that's why I already have some healthcare stocks and may add more later on this year. But those are 2 areas you want to pay attention to, want to explain and help you understand what's going on. It is going to continue to happen. Again, we've only raised interest rates, the Federal Reserve, not me. The Federal Reserve has only raised interest rates once this year. That is going to continue to happen. It's expected, but the market isn't always rational. It's always going to react, a little more than what it should. And again, we've known this for a while, and the market was like, oh my God, I'm going to jump off a ledge or a curb or whatever the market does today, and that's exactly what it did. But y'all get the point. So that is it for me today. If you can do me 2 favors, like and subscribe, that's one. That helps the algorithm tell people that this content is good. The other thing that you want to just hit the share button, tell people about the channel. I be hearing y'all, and you're like, oh, this dude is really cool, blah blah blah. I appreciate that. Continue doing that. Let's go ahead and grow the channel and help you to understand the stock market a bit more. All right, that's it for me. I'll talk to you later. Bye.